It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, smartest guy in the room,
Hey, Paul.
Michael Becker.
How's it going? Jump the gun there.
The mayor of Beckerville. Hello, Mr. Maker. Thank you for making an appearance today.
Thanks, Paul.
So Michael Becker, who is a principal in over 25 large apartment buildings and what is that, about $500 million in real estate?
Yeah, we've been a principal in over $500 million in real estate transactions, either on the buy or the sales side.
And was it this year you guys did 500 K1s with your investors?
Yeah, I just finished up tax
How
returns.
How do you even pay attention? I mean, that's incredible.
So it's a lot of K1s for sure, no question.
You must have a good-sized staff to stay on top of that.
We do.
Good for you. So before we start to ask Mike a question, I kind of want to review a little bit about what's going on in the Old Capital world. Don't forget, we are going to have another speaker series sometime in the second week of May. So put a save the date. I don't know if it's going to be Wednesday or Thursday, but we're going to have another great speaker. We just had Dr. Dotzer talk a little bit about what's going on in the economy on a national perspective. We had 500 plus attendees that were investors and sponsors and everybody that has to do with real estate they came across. And I think Dr. Dotzer put out a great presentation.
Definitely did. Yeah, very bullish. We mentioned this on the last podcast, but I think the theme was something like clear sailings ahead or smooth sailings ahead. He really was pretty bullish on the economy and really thought that the Tax Reform Act that he didn't think was going to pass a year ago that actually passed really kind of extended the cycle, was his basic recap of the high level of the conversation that he had.
He did a great job. And then don't forget to go onto Old Capital Podcast for two things. One, don't forget to download the 17-page white paper report on structuring multifamily finance for your property. So that's a good white paper report that Michael and I wrote that we updated for 2018. I think that's a good basis or a platform to kind of understand a little bit more about how these transactions get put together. And on that same website on oldcapitalpodcast.com, don't forget our September 13th Get in the Game conference. That's the all-day conference for Old Capital in Dallas at the AT&T Stadium. We're going a little bit bigger this year, Michael. What do you think about that?
Yeah, I think we're hopefully have north of 700 people there, maybe more. And we just announced the keynote speaker that we just signed up, which is the one and only Roger Staubach, the Heisman Trophy winner, the two-time Super Bowl champion, and very, very accomplished commercial real estate investor here locally in Dallas-Fort Worth.
Yeah, he's the guy you want to listen to. I mean, he really does have a great background. So the theme of the conference is Get in the Game, AT&T Stadium with Roger Staubach and the Old Capital team. So the question that comes up today in the Old Capital podcast is, Michael, we're at the second quarter. How are things looking today? Any concerns? That's the question. So one of the things I pulled open is just a little bit of a report talking a little bit about the investor sentiment right now. That the annual CBRE America's Investor Intention Survey found that 45% of investors plan to increase acquisitions this year, while 43% expect their volume to remain unchanged. The combined 88% is up from 83% the year before. So just 12% of the respondents said they expect to reduce their buying activity, down from 17%. So the question again is, how are things going out there for the beginning of the second quarter?
Yeah, so, we just kind of finished basically the first quarter for 2018. And, one of the things when we first kind of went into the year was it was going to be really fascinating to see how the marketplace reacts. Because from, say, November through, basically the end of the first quarter, the 10-year Treasury probably rose, 50, 60 basis points. It kind of went up almost 70. It's kind of settled back down about 55, 60 basis points as we record this. And an increase in 10-year Treasury over, say, like the beginning of November of 2017. So how's the market going to react to the increased rates? So the capital markets, the spreads kind of came in a little bit. So, even though we said to have about a 60 basis point rise in a 10-year, the spreads kind of compressed. So it's really about a 30 basis point, give or take, rise to the apartment rates.
So again, explain to me what is a spread and what?
So when you get a commercial real estate loan and it's fixed, all these loans are generally priced off the 10-year Treasury plus a spread. So if the 10-year Treasury, like for example, as we record this is is about 2.75, and you have a 2% spread above it, that would make your interest rate 4.75. So you get the 10-year Treasury plus the 2%, and that's kind of what they lock in at. So as the 10-year Treasury rises, generally the financing costs of all the commercial real estate out there, including the multifamily space that we focus on, goes up. So, and generally speaking, what the thought process is the cap rates on a commercial real estate and apartments are generally correlated with what the Treasury rates go. So as the interest rate goes up, the cap rate should expand. As the interest rates drop, the cap rates should kind of compress and get a little bit lower. That's generally the trend, but it's certainly not in perfect lockstep. And kind of coming into the year at NMHC, which is a big apartment conference in January that all the major owners go to, and that Paul and I were at.
About 10,000 people show up for that.
Yeah, it's a big deal. So a lot of the brokers save their listings to come and bring out, right around the time of NMHC. So because all the apartment owners from all over the country are going to be there. So those deals that launched in late January really kind of have their call for offers kind of into February and first part of March. And that's when they pick. So it was really kind of fascinating to see what was going to happen, where the buyer's going to kind of push back on the pricing that the sellers want, or were they going to capitulate and actually pay the same pricing even though the financing costs went up. So kind of what I observed through, there's been many deals that kind of now been awarded. The general feedback that I'm getting and what we observed is that the marketplace essentially just absorbed the 30 basis point or so rise in the financing costs, and actually cap rates further compressed, another 10 or 15 basis points. So meaning that, what I think is happening is there's so much capital, from what Paul's just quick comment on that survey he read. There's so much capital out in the marketplace searching for deals. Everyone's really nervous about putting money in the bond market because, these rates are kind of generally ticked up. And if you own a bond and the rates go up, the value of the bond goes down. It's inversely correlated. And the stock market's been roaring for, 8, 9, 10 years now without any sort of major correction along the way. So everyone's, a little fearful of putting the money in there. And then if you sit in cash, you don't really get much yield. So really it's kind of forcing a lot of people into the commercial real estate space, and the apartments are the top of the food chain as far as asset quality and asset type within the commercial real estate space. So it just seems like there's so much money out there, it's just forcing these cap rates a little bit lower. So that's really kind of what I've observed. And it doesn't seem like we have any sort of sign of slowing up in the immediate or near term. And listening to Dr. Dotzauer, every economic indicator that's out there is leading to us having, multiple more years of the expansion of good economy. He doesn't really see anything on the horizon that is, immediately out there that's going to cause, any sort of correction. The only thing he really kind of gave as, potential things that can cause recession to hit is really if the 10-year Treasury rises, which would be the only way it's going to go that way is if the people in the economy fear that there's going to be a lot of inflation, which he doesn't really see that being the case. 2, if oil prices go up quite a bit, that would be inflationary. Or 3, if there's such labor shortages that the wages rise dramatically, that should cause inflation and then, potentially make the 10-year Treasury rise. So that was kind of his take back. So it seems like the marketplace is extremely bullish, which to Paul's point from that article, it feels that way in the marketplace as an active person out there trying to buy properties. It's a tough world. It's really competitive right now.
How's your investment in Bitcoin doing these days?
I never made one, so I'm doing good. Those who did, depending on when you got in, either you're still way up or you could be lost half your money.
Some great information from Mike. One of the things that I don't want you to forget, we mentioned this I think last week or before, is that we're doing an apartment investor network out in San Jose, California. It's going to be like a kind of a bi-monthly event up at the DoubleTree up in San Jose. We have so many investors that come in wanting to invest in Texas or just get some information about what's going on. They fly in. Now it's time to kind of reverse, and we'll fly out to see them and maybe bring some people out there to talk a little bit about what's going on in real estate. So,
what day is that going to be on?
That's going to be May the 2nd. May the 2nd. Go into the Old Capital Podcast website. We have a link there to sign up for that. I will be out there, and we're actually going to bring David Kahn from CoStar, who did a presentation here in Dallas. We're bringing him out to California to have him talk a little bit about what's going on in the bright, shiny state of Texas, about what's going on out there, not just Dallas, but the entire state. So May the 2nd, San Jose DoubleTree. Sign up at the Old Capital Podcast. We would appreciate that. Michael Becker, thanks for hanging out with us in the podcast. We appreciate that.
Thanks for having me, Paul.
And I'll talk to you soon. Again, I'm Paul Peebles. Have a great day.